Hey everyone, Ford and AT&T offer investors a strong dividend yield. But there's more to investing in dividend stocks than just looking at the dividend yield. And that's what I'm going to share with you in this video. I'm going to compare Ford and AT&T across all the important financial metrics to come to a conclusion on which one is the better dividend stock to buy for 2024. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, of course, it all starts with sales, right? Revenue is the top line. That's where everything flows out of. So, revenue is something I definitely want to compare these two on when I'm trying to decide which one is the better dividend stock to buy. And what we notice is ups and downs here from Ford and AT&T for different reasons. AT&T's decline you see here, this is a major drop off, and you might get worried when you see this, but this isn't anything alarming. This was due to a divestiture. AT&T sold a big part of its business, and so that dropped its revenue, but it got equity in return, and so it wasn't organic decline. It wasn't as if customer demand fell off dramatically as you see in the chart. The other thing you notice is the big uptrend for Ford, a big boom in revenue for Ford. Now, this is something to consider as well. This, in my opinion, is a temporary boom caused by the unique circumstances in the aftermath of the COVID-19 pandemic. Supply chain shortages have allowed car manufacturers and sellers to selectively produce their highest profit, their highest priced models, and they've experienced robust sales and robust profitability ever since the aftermath of the pandemic. I don't think this is going to last longer term. I don't think this is going to be the case. But nevertheless, Ford has benefited significantly from this near term trend. I mentioned that Ford and AT&T offer strong dividend yields. AT&T with the stronger dividend yield at 6.66% and Ford with a 4.85 dividend yield. Now these are both better than the 10-year government bond, which offers you less than 4%. And also with dividend stocks, you get the possible upside when the stock price increases. You also want to consider the operating profit margin comparison between two dividend stocks. And in this comparison, AT&T is in the lead here with a 20.09 operating profit margin compared to Ford with a 4.17% operating profit margin. You can see that over the last decade, AT&T has a better operating profit margin than Ford, and this is likely to be the case for the next decade as well. The business model is much more lucrative for AT&T, much more profitable compared to Ford, which operates in a capital intensive, lower profit margin industry with much stronger competition, and competition has only gotten worse in the last 4 or 5 years. Think of how many new car companies were launched over the last few years, right? You've had several EV exclusive companies come out, and they've all been funded with billions of dollars. Well, not all of them have had billions of dollars of funding, but many of them had billions of dollars of funding. Think of Rivian, which got nearly $20 billion of funding. Lucid, which got nearly $10 billion of funding. These are companies, even though they're not making money yet, they're still operating in the industry. They're accumulating, they're buying up resources, they're raising costs for all of the other manufacturers, and they're putting their products into market and competing with the existing cars in the market, which is going to drive down profitability industry wide longer term when these supply chain shortages and the unique circumstances from the pandemic normalize. All of that extra supply that's come into the market over the last 3 or 4 years is going to start weighing down on profitability even more, right? That's basics of economics. You remember that from your Econ 101 class in college, which I teach, by the way. We go through supply and demand. When supply increases and demand stays the same, that causes price to fall. And when price falls, profitability falls. That's just the basics of economics, and that's inevitably going to happen with the car industry unless several of these car companies go bankrupt and close up shop, within the next couple of years. The next thing I wanted to compare these two on is leverage. And looking at this, they're both highly indebted. Ford has $142 billion in debt and AT&T has $138 billion in debt. But Ford has $41 billion in cash to offset some of that debt, but AT&T only has $7.5 billion in debt. So the leverage ratio is in favor of Ford here, although they are both indebted. And given that Ford is in a much more cyclical business, I would say the risk is higher with Ford than it is with AT&T, because AT&T's customers renew their subscriptions at an over 99% rate, whereas Ford depends on the economy whether or not its sales are going to be good, if its profits are going to be good. So it's much more riskier than AT&T, where customers just mostly automatically make their payments. Whether or not the economy is good or bad, they're still going to make their wireless phone plan payments. But are you going to go out and look for a new car when you lose your job? Probably not. Are you going to go out and look for a new car when you notice that your company is having layoffs, even though you're not the one that is getting laid off? No, you're probably still going to be cautious, right? So Ford's sales are strongly correlated to the market conditions, which makes it more risky to have this much debt when you're also exposed to cyclical factors. So let's look at over the next couple of years, what are the estimates? So for Ford, analysts expect revenue to grow by 4.1% in fiscal year 2024, but earnings per share to fall by 5.7%. Again, this is due to all of the factors I mentioned earlier. Competition is increasing. Costs of everything is rising, right? We just saw the labor contract. We just saw inflation increasing cost of goods. Prices are coming down because of price wars and price cutting and promotions. All of that is weighing on profitability, and analysts expect Ford's profit earnings per share to decrease by 5.7% next year, even with the 4.1% revenue increase. And it's more of the same for fiscal year 2025 for Ford, although analysts expect revenue to decrease by 1% and earnings per share to fall by 0.7%. So earnings are expected to come down for Ford over the next couple of years. And I mentioned that's understandable, that's to be expected, because they experienced boom times in the aftermath of the pandemic when the confluence of factors worked in its favor. And I said that's not going to be long lasting. And so this is not good news for Ford. AT&T, meanwhile, analysts expect revenue growth of 1.2% in 2024 with 1.7% earnings per share growth and 0.9% revenue growth in 2025 with 0.9% earnings per share growth. And longer term, this is the kind of revenue growth that investors should expect from AT&T. Low single digits, right? It's a mature industry. You're not getting very many new customers that are adding their wireless phone plan for the first time in their lives. That's not what's happening. So you're just getting the same customers renewing, and you're hoping to add some pricing power, increase the prices a little bit to gain revenue on the top line. However, I think longer term investors can expect better earnings per share growth in the mid-single digits for AT&T, closer to 4, maybe 5% earnings growth, over the next decade, even though over the next 2 years, they're going to be less than 2%. That's the kind of growth you should expect from these two companies. These are not fast-growing companies. They're not going to double your money overnight. But then again, if you're looking at dividend stocks, you're probably not looking to double your money overnight. You're probably looking for steady income over the long term. And finally, let's look at the valuation. And interestingly, they're selling at very close prices. Ford and AT&T are trading at a forward price to earnings of 6.9 for Ford and 6.7 for AT&T. So if I was to choose one of these two dividend stocks to buy for 2024, I would pick AT&T. I would pick AT&T for the better profitability, the better industry characteristics, right? We saw the operating profit margin significantly higher, and there's much less competition in the wireless space compared to the car manufacturing industry with so many competitors, all of them hoping to gain market share, lowering prices, etc., etc. You don't see that much of that in the phone industry, right? You don't see them competing on price. They compete mostly on promotions, like if you trade in your phone, you'll get this other phone and you'll get this other one 25% off, whatever. But the monthly plan, the monthly payment plan, the core of the business, you don't see them competing with each other. I'm talking about AT&T and T and Verizon. They're not one going lower and lower and lower, trying to steal customers from each other. And that's good news for investors. So for all of those reasons, I would pick AT&T as the better dividend stock to buy for 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.